Alright, so everyone who follows me knows I've been incredibly bullish on the market. I flipped bullish, called the bottom on January the 6th. That's my pinned tweet on Twitter as well as on my YouTube channel. I've done so much analysis about that. And if you truly pay attention to what I try to show you on this channel, I want you to go back and watch this video, 5 reasons Bitcoin will pump 4 months ago after I called the bottom. Okay, so we go back to this video. And what you're going to learn, guys, there's a key takeaway that I've shown you in this video, is that when Bitcoin goes sideways and it does nothing for 8+ weeks, okay, 9 times out of 10, it's going to result in a massive breakout higher. So for example, see down here at 16K when I was calling the bottom and I was telling you why we were going to pump? Well, because we went 1, 2, 3, 4, 5, 6, 7, 8 weeks of doing nothing. Okay, and over here we did 1, 2, 3, 4, 5, 6 weeks of doing nothing before we pumped. Okay, and then we got hit with the FTX. Here we did 1, 2, 3, 4, 5, 6, 7 weeks of nothing. Bam, we explode higher. Here we did 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of doing nothing. Then bam, we explode higher. Here we did 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks of doing nothing. Then we exploded higher. And only one time did you ever see us do 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks before we actually collapse lower. Okay, so pretty much 9 times out of 10, when you see Bitcoin does nothing for 8 weeks at a time, okay, 9 times out of 10, it's going to lead to a massive breakout. So if you paid attention to my reasoning for calling the bottom in January, in December, at 16K, then hopefully you actually pay attention to the reasoning to be able to understand that also here now we've been doing nothing for so many weeks at a time. It feels like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks of doing nothing, guys. So like I said, the pattern is when you get 8 to 9+ weeks of doing nothing, 9 times out of 10 is going to lead to a massive breakout. And that's exactly what I anticipate. And I stay with that pattern. I stay with that overall, thing, because why would I play the low probability of us collapsing when I know 9 times out of 10, when price does nothing for a long time, it leads to bullish explosions and breakouts. Okay, so I want to compare our bottom in 2023 to the bottom that we had in 2019, as well as the bottom we had after COVID. Okay, so what you can notice is obviously this formation, like you see this little phase right there, you see that little phase right there, and you see this phase right here. Okay, you can see, like, just look at the similarities, and what I want to point out is how similar today looks to right here, actually, right? Because look at this bottom. Okay, then you have your top 1, slow down, bam, top 2, slow down. So here, bam, top 1, slow down, top 2, slow down. Okay, so and then see that right here, that's like pretty much where we are, this third one right here. Okay, very, very similar to what we look like coming out of COVID. So here, obviously, the catalyst that really sparked that bull run there was QE and stimulus. But here, do we have that same QE and stimulus? It's not the same, right? But what could be the catalyst? Could it be the debt ceiling being raised? Could it be banks going down? Obviously, is a very bullish catalyst for crypto. To us, man, to me, it really doesn't matter what the catalyst is. I just know that overall, okay, we have pretty much the same pattern as coming out of the COVID bottom. Doesn't mean it's going to play out the exact same. Doesn't mean we're going to have the same rate of change to the upside, because the rate of change to the upside could be faster, could be slower. It's hard to anticipate how bullish could the catalyst be, whatever that catalyst may be. Okay, but the point is, you don't need to know what is the catalyst. Are we going to go up because banks are falling? Are we going to go up because QE? Are we going to go up because the moon says so? You don't need to know why. You just need to know the pattern shows you, hey, this is just like coming out of the COVID bottom. So keep in mind, hey, we may play out very similarly to that, because patterns tend to repeat, and you don't need to know why. Okay, just know that they do. That's it. All right. Now, something here, going back to this bottom out of 2019, right? I want to take note of how we had these major wicks pop up. Okay, see this major wick, 1 wick, 2 wick, 3 wicks pop up in a descending fashion there. Okay, this is a common pattern you'll see, these 3 descending wicks inside of a chart. it's a bearish pattern short term that can happen. Okay, so this is actually really cool. See, this is the thing about charts. You can find patterns, you can notice them, and you can apply them on different charts. So for example, let me show you how this pattern played out here on monkeys. Okay, so here you have this big run up and then these 3 lower highs with wicks coming out the top. Check out monkeys. You had this big run, okay, and guess what you have? 3 highs with wicks coming out the top. See that? In a descending fashion, right there. Bam, okay, then you pull back. Okay, so look at this. Once again, 3 descending highs with wicks coming out the top, bam, into a pullback. Okay, bam, into a pullback. Like, guys, I'm telling you, patterns repeat, whether it's on monkeys, whether it's on toilet paper, whether it's on trees, lumber, cotton, wheat, whether it's on bank stocks. These patterns, they just play out, and it's not your job to know why, they just do, okay? And so if you stop focusing on the why and just focus on the facts, and the fact that is that they tend to play out the same way or similarly, you'll be a way better trader, okay? So what I want to point out to you is the distance from the all-time high here to this top right here. Okay, so for example, we set the high at 20K, and then bam, we pull back 33.7% to this top. Keep in mind, if we pull back 33% to the next top right here, guess where that's going to get us to? Bam, 48K. 48K is our next major resistance level. Okay, bam, right there. Okay, and this is why I've been saying 48K is the most likely point for us to get a short-term, like a true top, maybe. Okay, and so you can notice once again, the reason 48K makes so much sense as our local top truly is because 48K was this major level before we began our descent from 48K down to 16K. Okay, so look at this once again, bam, around 30% into that resistance. Okay, so that scenario would be extremely similar to this right here, us topping out there in 2019. Well, if we get up to 48K, that is where I would expect to actually get a pullback, you know, as people take profits. Because think about it, 48K is a 300% return from the bottom, right? A perfect 3x. The market usually doesn't go up in a straight line. It pulls back, people take profits, and the market's cyclical. So, you know, you could have 2 quarters of amazing performance and then 1 quarter of some bad performance. Or 3 quarters of terrible performance, and then bam, the 4th quarter is great performance. Okay, so the point is, I'm just pointing out what I see, right? Because we're comparing today's bottom to these last 2 bottoms. And so case number 1 that we see here is this right here, right? Case number 1. Case number 1 repeats, guys, we're going to 48K. If case number 2 repeats, okay, this is a number 2. Case number 2 repeats, then we got that coming, okay? Of course, is it going to repeat the exact same way? No, but the point is we should expect something similar or along the lines of case number 1 or number 2, because the way we're moving is so damn similar to both case number 1 and case number 2, okay? So once again, our job is not to know the catalyst. Is it going to be because the debt ceiling's raised? Is it going to be because banks are falling down? I don't care. It doesn't matter. The patterns are just going to tell us what's going to probably happen. So once again, what should you expect here? You should expect case number 1 or you should expect case number 2. If based on case number 1, you should expect that we pump up to 48K, okay, which is 33% down from the all-time high, okay, before a pullback, a natural pullback, okay. 33% down from the all-time high hits us at 48K major resistance, okay, and that would be a 3x from the bottom, okay. So also take note of this. Bam, this was 315% from the bottom. Guess what, guys? If we go up to 48K, that'll be 207% from the bottom. And considering that the market cap is higher now than it was then, you have diminishing returns, you can see how this makes a lot of sense, right? So bam, you know, the market would go up 3x, the market would go up, well, this was 4x, this was 3x, right? And then it pulls back. That would be your case number 1. Case number 2 is some bullish catalyst, whether that's the debt ceiling, whether that's banks falling, we just start moving higher, faster than anticipated, faster than most people expect and believe. Okay, and with the way the world is, and if, yes, banks are falling down, banks are going under, obviously that's an incredibly bullish catalyst for Bitcoin that we've never had really before for Bitcoin, okay? So, banks were not falling. Banks were not crumbling over here. Okay? Banks were not crumbling over here. But once again, that could be your catalyst this time around. Maybe it is, maybe it's not. It's not our job to know for a fact what's the catalyst, because there's going to be thousands of catalysts that are bullish and there's going to be catalysts that are bearish for the market. And that's why trying to hone in on one catalyst, it's kind of pointless, because there's thousands of catalysts going on in the world today. There's thousands of things happening all around the world. So that's why it's better to just focus and anticipate price action based on the pattern. That's why the two patterns I'm looking at are pattern number one, pattern number two. Pattern number two means, bam, we're just going to go straight up pretty much, Pattern number one, I expect 48K. So once again, people can be bearish if they want. Everyone's going to argue, are we going to hit 25K? Are we going to hit 23K? Are we going to hit 22K? You look like retards. Okay, that's 10% downside when very likely we're headed up to 48K. That's 78% upside. And we all know inevitably, especially with the way world is, Bitcoin is programmed to go above 100K. All right? So here you are, all the idiots, all the kiddies are arguing, oh, are we going to stop at 25K? Are we going to stop at 24K? Are we going to stop at 23K? They're all morons, okay? Because this is what you're looking at, is like 80% to 400% upside. And so, let the idiots talk about, are we going to hit 24K, 23K, or 22K? Meanwhile, the actual people that are smart, you're focusing on the inevitable targets of 48K and 100K plus here at this point, because you understand the worst is behind us, dude. The worst is behind. We had 14 months and a 78% dip. The worst has happened. Okay, do you really think a 78% dip is about to happen again and get us down to 5K Bitcoin? You have to be a complete retard and a moron. But, thankfully, we have those retards and morons who are going to short the price, and they're just going to add fuel to the fire for us to go higher. And so I thank them. I thank these idiots, because these idiots are kind of what make us look good and make us look smart. Okay, without the idiots, it wouldn't be possible to have bought the bottom, right, is what I always say, is someone had to be wrong so that I could be right. Okay, same thing, when I shorted the top at 69K, someone had to be buying so that I could be selling there, right? So anyways, thank you to all the idiots who just don't get it. I have no time, honestly, to explain to you idiots. It's crazy to me that, there are people out there that are that dumb, and I just don't care anymore. I don't care. So at this point, man, my analysis has been the exact same, is we are either going to, in my opinion, go parabolic because of the external conditions and factors we have not had before, such as possibly banks going under, such as, hey, maybe the debt ceiling gets raised here and that creates a bullish explosion for Bitcoin. Okay, whatever the catalyst may be, once again, my job is not to know what exactly is the catalyst, because there's thousands of catalysts happening around the world. So this is scenario number two. This is scenario number one, okay? And these are the two most likely things, because the way we're moving is so damn similar to both of those coming out of the bottom situations in 2019, 2020. Once again, I called the bottom, okay? On January the 6th, I called the bottom, and you cannot make this up. This is all timestamped. This is all factual. This is undeniable. Watch my videos, watch my tweets. I am a full-time bull from this point forward. Guys, I shorted the top at 69K. I told everyone a dump to 47K was coming. I called the dump 230. Okay, and this was at 16K. I told you I'm a full-time bull from this point forward. The bottom is here, bro. Watch that video. Then, of course, I told you 5 reasons why Bitcoin's going to pump, and the main reason for that was that when Bitcoin goes sideways for 8+ weeks, 9 times out of 10 it's going to lead to a bullish explosion. Okay, so congratulations. If you're a bear, you're an idiot, and I have no time to argue with you. Okay, I've been bullish since the bottom. I remain bullish, and once again, if you call me a perma bear from here to the bottom, well, call me a perma bull from now on until I eventually flip bearish again. But the time, I will not flip bearish for a long time. It's going to be a long time before I flip bearish. So, get on the right side, because clearly I've been right. Guys, I shorted the top at 69K and I flipped bullish at 16K. This is undeniable. This is factual. This is all on my YouTube. This is all on my Twitter. There's no one who has honestly called it better than me. I truly believe that, man. If there is, show me. Tell me. Prove it. But there isn't anyone, man. So you can be on the right side, the side that I'm playing, or you can go on the opposite side. Anyone who's watched me over the last 2 years knowing playing the opposite side of me doesn't typically work out well for people. So I'm tired of explaining that, man. You do what you want. I'm telling you my point of view. Scenario 2 or number 1, they're both fucking bullish as shit to me. And you guys, all the kiddies, you can scream about, are we going to hit 25K, 24K, 22K? You're all morons. Have fun, okay, talking about your 2% downside targets. Meanwhile, the real G's are going to focus on the actual, where there's actual meat on the bone, okay? The worst is behind us. Please continue to be perma-bears and perma-idiots. I'm out. All right, guys. By the way, if you want to join my alerts, I alert you for completely free on my live trades that I'm taking. Follow me on Twitter if you're not already. Okay, I don't really like to make YouTube videos because I feel like I've been repeating myself since the bottom. I've been telling people stay bullish, stay bullish, stay bullish, stay bullish, stay bullish. And it's like, do I really need to keep making videos like that? It's like, dude, how many times I got to tell you I'm bullish, and how many times I got to do basically the same fucking analysis over and over and over. I mean, today I've just done it in a slightly different way. And, like, that's all it is. I'm just explaining to you the same shit just in a slightly different way. And, it's getting boring. It's getting annoying. And at the end of the day, like, if you just listen to me since the bottom, if you just listen to me since the top, you're killing it. And that's it, man. You don't really need to update people daily, I feel like. And, I don't know, dude. Just follow me on Twitter. Join my alerts. It's completely free to join. First link down below if you want to join. And yeah, I'll see you guys later. Take care. Bye.